Welcome back to the channel. I'm glad you're here. Today we're breaking down Amazon, one of the most debated stocks in the market right now. Is the $200 billion AI bet a stroke of genius or a ticking time bomb? By the end of this video, you'll have the full picture, valuation, analyst targets, the 2028 forecast, and exactly what the bulls and bears are fighting over. Let's get into it. Amazon is down 14% from its all-time high, trading at $238 today. Wall Street's consensus from 66 analysts is $312. That's 31% upside. But Amazon is spending $200 billion on AI infrastructure this year alone. That single number is driving the sell-off, the debate, and the 2028 opportunity. Let me break it all down. Why is AMZN down right now? Three forces converged this week. First, CapEx shock. Amazon confirmed $200 billion in capital expenditure for 2026, up 58% from last year. Free cash flow already collapsed 66% year over year to $11 billion. For short-term investors, that's terrifying. Second, regulatory pileup. The FTC antitrust trial against Amazon is expected to commence mid-2026, alleging anti-competitive behavior. The EU is simultaneously reviewing AWS cloud procurement, potentially blocking government deals across Europe. Third, macro pressure. Strong U.S. jobs data this week pushed Fed rate expectations higher, creating valuation pressure on every growth stock. Amazon dropped 3.29% today alone, biggest loser in the Magnificent 7 ETF. Current valuation. Price, $238. Market cap, $2.57 trillion. PE, 28.86. Revenue trailing 12 months, $716.9 billion, number one in its industry. Net profit, $77.7 billion. GuruFocus GF Value, $231, near fairly valued. Alpha Spread DCF Intrinsic Value, $175, suggesting 27% overvaluation on pure cash flow math, heavily impacted by the CapEx surge. The critical context. Amazon's forward PE of 28.86 is 79% below its 5-year historical average. By Amazon's own standards, this is actually cheap. Analyst ratings. 66 analysts, S&P Global Consensus, strong buy. Average 12-month target, $312. High, $370 from benchmark. Most recent, Truist at $320, Wells Fargo and TD Cowen averaging $327, all issued in the last 2 weeks. JPMorgan named Amazon its best idea. Citi projects AWS revenue growth of 29% for full year 2026, accelerating to 37% in 2027 as Anthropic and OpenAI partnerships scale. Zero sell ratings. The 2028 picture. Base case, $380 to $420. AWS sustains 30% annual growth. Trainium AI chips scale past $20 billion. Advertising hits $80 billion. Operating margins expand to 12 to 14%. At 35 times forward 2028 earnings, you get $400. Bull case, $480 to $500. AWS hits 37% as Citi projects. The OpenAI cloud contract expands. AI infrastructure spending generates direct returns. Amazon's flywheel compounds faster than expected. Bear case, $200 to $220. FTC forces structural changes, potentially separating AWS from retail. CapEx returns disappoint. Multiple compresses to 22 times earnings. Bulls versus bears. Bulls say, AWS posted its fastest growth in 13 quarters, 24% in Q4 2025. Custom AI chips, Trainium and Graviton, generate over $10 billion annually at triple-digit growth. Amazon holds a $38 billion cloud deal with OpenAI. Advertising is becoming a $60 billion high-margin business. Evercore's Mark Mahaney called AMZN his top pick for 2026. Goldman, JPMorgan, BofA, Citi all buy. Bears say, free cash flow crashed 66% year-over-year. $200 billion deployed in a single year with no guaranteed return. FTC could force Amazon to restructure the flywheel that makes it powerful. EU regulations could cut AWS out of government contracts across 27 countries. Conservative DCF says $175, not $238. What specifically concerns me? 1. $200 billion capex with free cash flow collapse. Biggest capital commitment in Amazon's history. 2. FTC antitrust trial commencing mid-2026. Forced AWS separation would be devastating to the integrated model. 3. AWS competitive concerns. Multiple firms flagged Amazon may be falling behind Azure and Google Cloud on AI features, which is exactly why it needs to spend $200 billion in the first place. Final take. Amazon at $238 is near fairly valued on traditional metrics, but discounted relative to 2028 earnings potential. 0 sell ratings. $312 consensus. AWS accelerating. AI chips scaling. This is the quiet compounder that could surprise everyone, while Tesla and SpaceX grab all the headlines. Best entry, $230 to $245. Dream entry, below $210. Next earnings, late July 2026. Subscribe for weekly breakdowns. Are you buying Amazon at $238? If you found this breakdown useful, hit that like button. It takes 1 second and it genuinely helps this channel reach more investors like you. If you want to follow along as I track Amazon, Microsoft, SoFi, Nvidia, Tesla, and Meta every single week with real data and no hype, subscribe. Hit the bell so you never miss an upload. And drop a comment below right now. Are you buying Amazon at $238 or waiting for the CapEx story to clear? I read and reply to every single comment. See you in the next one.